All right, let's go over some examples of the single bar price action, the bullish engulfing to be specific, okay? So I have multiple pairs pulled up. That way I can show you how it would look like, okay? Now, first one we're gonna go over is the AU. We're looking at some pairs that people like to trade for the most part because this setup works on every single time frame. And again, I'm gonna repeat that one more time. Every time before the market buys, I guarantee you that it will always give you a bullish engulfing. It's just sometimes it may look different, right? So on my price action book, the ultimate price action, I have all 5 variations available for you to see how it would look like when you take a buy in the market. Okay. So you do have, since we're going over the first one, the single bar bullish engulfing. Now, when you do the back test yourself, you will notice that, sometimes it takes 1 or 2 bullish candles to engulf. And of course, where you might get something like this, right? Where you do have a double bottom, right? 1 point. And this is the second point, right? 1, 2. And then you will get a bullish engulfing that engulf either the last 2 or 3 bullish candles. See right here, it will be a bullish engulfing. As you can see, it engulfed the last 2 bearish candles. Now, again, this is in a daily time frame. If you take the trade on the daily time frame, this is how it would play out for you. Now, I like to take the daily time frame because it makes things a lot easier for me. When you are inspired to become a position trader, you just simply take the trade and you leave it alone for X amount of days. And for me, market closed at 4:55. By 5:15 or 5:20, market already open. I don't really have to worry about the spread as much because if I'm looking to buy the market, this is my entry and my stop loss going at the last low. In the case of this one right here, because that's the last low of it. So I don't really have to worry about it as much. And I'll just target the previous high that the market gives me, right? So which is the first target TP and the second target TP. So at any moment in time, I could close and wait for the next setup accordingly, right? So since we're doing a top-down analysis, in the case of this one, let's clear up real quick. In the case of this one, this is the setup that where we talked about when the market gives you a double bottom like so, where the second hit will be somewhat a bit lower than the previous one right here. As you can see, it went up pretty much a bit lower, but it's still within zone. Now, if you're paying attention, right, when you put the zones, use the line chart to get the exact turnaround point. Me personally, I like to use the line and the bar like so, right? So I'll place it like so and run it straight across. Okay, just like that. All right. Ooh, a bit more precise, yes. All right, just like that, right? And then the second one will be the wick. So this is the exact turnaround point, and then the second one will be with the wick, right? Like so, where I identify the lowest point of the wick, and then I'll just mark it like so. Now, of course, you have the option just to use the rectangle property. As you can see, it's already in there where you use this, okay? And mark the zone. So as long as you get the close of the last bearish candle to the wick low, you should be just fine. Something like this, okay? All right, let me just stretch it because I'm gonna delete it after. All right, something like this. Very simple. Now, I know we hear that a lot. A few people's gonna say that when you watch this. It's easy said than done. That's because it is just as easy as said than done because you're looking at what the market did in the past. So you could join it when it does exactly the same thing in the present time, right? Very plain and simple, straight to the point, okay? Let's delete this. So again, I'm gonna repeat that one more time. That is something that I can guarantee you every time before the market buy, it will always give you a bullish engulfing. All right, it just may look different. Now we're gonna go ahead and drop down to a 4-hour time frame to see how else you could have taken that trade. As far as the earliest entry go, for me, the earliest entry is the 4-hour. Okay, bring it all the way forward, as you can see. All right, double bottom. Stretch it out a little bit. Boom. See that? Double bottom. Yeah, of course, in the 4-hour, you did get a form of some consolidation at this point, but I'll show you at what point where you had the first bullish engulfing. Okay, so this is the zone. We're gonna focus in this area right here. All right, just bring that forward. Stretch out real quick. All right. As you can see, market is in the zone. Yes, it's consolidating, but we already know what we're waiting for. We're waiting for a bullish engulfing, right? So we want a gold candle to be above or close above any of the gray candle, which is the bearish candle. So here is the first one. First one right here is this right here, right? As you can see, this bullish candle closed above this bearish candle right here. So this right here would have been your first entry, because at this point here, that's all the market was doing, okay? If I put the line chart on, you will see that exactly. I'm gonna go ahead and just remove only this one, so you can see what, let me make it look better, okay? But it went down, up, boom, all the way to our price action point, right? So let me show you how this right here in the line chart, it will look exactly like how I just drew it, okay? Look, you see that? Down, up, that's it. So let's go back to the candles. So here is your first bullish entry right here. No, I don't want to use this. I prefer to annotate. Okay, right here. Boom. Bullish engulfing, stop loss, wick low. Okay. As you can see, it never touched it. Okay. Yes, it went down, but it never touched it. Never. We did get another one, of course, but let me go ahead and show it to you. If, let's just say, hypothetically speaking, you was not there or you was asleep, you was not able to take the trade. Me personally, I prefer to take my trade on my PC. I don't like to trade on my phone. That's just me personally. But let's just say right here, this is the most obvious one, of course. There goes your entry point. Again, same concept. This will be your last low, because based on the previous zone, that's where it stopped at, right? So we're using the last low. Again, with the same thing. After you took it, see how it went against you, right? But it never went and hit you out. It never hit your stop loss, and it just shot up after that. So let's go ahead and mark that to see how it would look like with our entry point, okay? So we're going to run with the first entry point, of course, here. That's the bullish right here. Run this up a little bit. Okay. Stop loss. See that right here? That's the last low. Close, but it never hit it out, right? Look, I'm going to drag it just so I can match it with the actual engulfing bar right here. I drag this back a little bit. Oh. Okay. Now bring it down, stretch it up a little bit, and let's go ahead and go back to the daily so you can see exactly how it looks like, okay? Let's move forward. So make my life a bit easier. Let's go ahead and collapse and fit it naturally. Okay, look at that. Stretch it up. See how we look like? So easy double bottom setup. Look at your entry point all the way at the bottom. Again, since this was a daily time frame setup, of course, we targeting daily structures. So let's go ahead and do a quick little annotation real quick. We are talking about put you up here. All right. Did I get it? Yeah. We're talking about structure point here, here, and up there. Okay. So TP1 smash, 2 smash, 3, and then of course peak high up here, smash. Very simple. Entry literally at the very bottom. You know what I mean? Look at that. The entry at the very, very bottom. So let's go ahead and collapse this a little bit so you can see how it would have looked like. Okay. Look at that. Easy. Double bottom, right? Even though it went slightly low, still within zone. Again, same concept. If you would have took the daily, target high, great. Now let's go ahead and take a look at some other ones real quick. Now, what you could do is, what I recommend that you do, come on. All right, what I recommend that you do is go ahead and pull up any pair that you like to trade, right? Any pair of any sort. So just pull it up, identify the higher time frame, weekly, monthly, weekly, or daily. We'll just mark the zones, and then drop down to the 4-hour time frame and I guarantee you that you will have a bullish engulfing to go to the upside. All right, so let me collapse this real quick. Okay. Of course, we got a little bit of history going on as far as breaking retest, but what we focus on today is the double bottom, right? So, but just for learning purposes, if you wanted to know what I did here, so I'm just understanding structure point from the double bottom. It went up here, last bearish candle here, closed below it. Yeah, it's a break, no bullish engulfing, went way below it. It did come back to retest here, fell, just did not go that far, but it give you a much deeper retracement to come down. So at this point here is where I will be looking for my sell to come back down. And as you can see, so please remember at every structure point is a zone here. Same concept. It's like retest to fall. So that's pretty much what it was. So sell here and then sell here, right? But let's go ahead and focus on this right here, which was the double bottom. See, we got a hit right here and market is currently going towards it. Have not hit it. This is current date, okay? Haven't hit my zone yet, so I can't do nothing with that yet. So let's go ahead and stretch this out real quick and widen out. So this is what we're looking for right here, okay? Market is within zone. So this right here, okay? This is where we're looking to buy the market, okay? All right, so for those guys that like to trade Bitcoin, here is where I'm looking for my 4-hour entry. So drop down to the 4-hour, bring it in a little bit, right here. Okay, so I did mention that before, just like I have in my book, all 5 different variations of a bullish engulfing. In the case of this, it's not just a single bar bullish engulfing. Market gives you a 3-candle price action where you have the market giving you 2 bullish candles to engulf the last bearish, right? Look, wait, hold up. Let me make sure it really stands out to y'all. Okay. Make sure it's clear as day. Like I mentioned before, the market will always give you a bullish engulf, right? So last selling candle, as you can see, closed within the zone, wick to the bottom. First bullish candle right here, did not engulf, close right there. Second one, close above at this point, as you can see, and engulf it. So right here would be your entry. So you do have the option to place your stop loss at the end of price action wick low, or preferably the last low, okay? So let's go ahead and adjust real quick. Do a little bit of collapsing. All right. So entry point right here, option 1 or option 2, preferably option 2. You can't go wrong, but just always document your trade. That way you could change your stop loss if you feel like you're getting hit out more often. Always remember to drop the lot if need to. You know what? Let me do this real quick. A little side note, right? For learning purposes. We're just going to do hypothetically speaking, right? If we're risking 1%, right? We're risking 1%. Let's just say 1% equals $100, right? Let's just say we enter here, right? We're just going to throw that out there. We're going to enter here for a 0.05, right? Just hypothetically. Ooh, that looks like an 8, but sorry. Let's be more. 0.05, right? So let's just say from this entry point to here, that's $100 for your stop loss, right? All you got to do is drop the lot size to a low point enough where to here, it still equals $100. Okay, so it doesn't matter if this right here was 50 pips or points, okay, however way you want to say it, right? To this right here being 100 pips or points. It makes no difference. All you got to do is just drop the lot size. That way it equals that 1%. Or for those that like to risk 2%, I'm with you. Same concept, right? Just a win is a win, even if you're just making $20 instead of $50. Okay, if you're gonna make $5 instead of 15, a win is a win. Just be consistent with yourself. It's one of those things that I had to struggle with for a very, very long time because I saw the opportunity and I tried my very best to take advantage of it. So I had to learn to be patient and take the time to really grow. So I'm sure a lot of you guys are struggling with that too. So it's not that you don't really know how to trade. It's just that you lack the consistency or the discipline. We have to learn to take accountability for our actions. So by documenting your trade, it makes it a lot easier. But with this method, I guarantee you're going to come from either a 25, 50% to a 95% winning rate. That I could guarantee you. You're not going to hear a lot of mentors per se saying that. That I could guarantee you. Feel free to go back test any pair of some sorts that you trade. Okay. So let's go ahead and pull the buy with the bullish engulfing. And of course, we're going to run the stop loss at the low wick of it. Okay. That's what we like to use, the last low. So let's go back to the daily. So again, please remember, you could use the structures in the 4 hour for TP. That would have been the first one. Now, the trade was taken based off the daily. And of course, we could target the next daily structure, as you can see. Okay. Now, in the case of this, the structures look a bit different. What I mean by that is we're looking at these right here for the structure point. Also, if you're having a hard time understanding the structure point, just turn the line chart on. It's going to show you where they're at. So from here, okay. So that's your TP. First TP would got hit, right, within the same point. If you wanted to use that as the second one, or this right here is the third. But last points, target hit, very simple. So current market date, all right. Once market come within this point, right, I'm just simply going to wait for a 4 hour bullish engulfing to take the trade to go back up. Okay. Based off that daily time frame. All right. So again, I did mark more than one chart just to show you. It's literally the same thing every single time. For those of you guys that like gold, you know, quite a few people that love gold. All right. Same concept, right? Double bottom. Look, as you can see, you put the line chart on, it will show it to you. Boom, boom. We're going to be looking at this point here, fall buy. Okay. Let's go ahead and spread this out a little bit. So see that? We're going to be targeting this point right here. Okay. For a 4 hour price action. Okay. Very, very simple, straight to the point. Let's go ahead and put the candles back on. Now what we're going to do is let's go ahead and go to the 4 hour. All right, here we go. All right, so here we go. Didn't think it was gonna be so much far. All right, cool. Hopefully this is wide enough so you can see how it stands out, right? So you can see how the market comes to the zone. So this will be a perfect example how when I was talking about, again, the different variations when it comes to a double bottom setups, right? This is the zone itself, right? But in the 4 hour, you see it hit here. This, it give you 3 bullish candles swing off the last bearish. If you took this, it did go your way, but it just did not go as far yet. But due to the fact that we put in a stop loss at the last low, even if you did place here, it never did, you would have to endure the drawdown. But for the most part, it did go your way. So since we are looking at this for the entry point, let's go ahead. Well, I already circle it. It's just as easy as 1, 2, 3. So for by now, you should be able to just call it out, right? So here, boom, entry point, stop loss. This is the last low. If you want to use this one, by all means, but you have your options, of course. You got one here, one here, one here. Very simple, straight to the point, bullish engulfing to the moon. Rinse and repeat, rinse and repeat, rinse and repeat. This is going to be the easiest thing you ever learn. I find it that a lot of the students that I teach, or most of them, find this to be very, very difficult because they're so used to trading the lower time frame. I don't want to call them adrenaline junkies, but It's just a fast pace, and that's what they were taught. And this is the easiest thing they could ever do, but they find this to be very, very difficult simply because they were taught to wake up at 2 in the morning and stay up, or wake up at 8 just to sit there. Like, just think of this, right? For me, just like I mentioned before, right? Since we trade in the 4 hour time frame, meaning we are entering the market in a 4 hour time frame, our price action will always be available at one of those times, right? 1, 5, or 9, right? Either AM or PM. Okay, very, very simple. So if you are somebody that says, "Yo, I like to trade the New York section, right? Or session. I'm sorry, the New York session." Well, we're talking about the 9, right? 9, 10. Look, literally at 9 p.m., the last 4 hour candle will close. Between 5 to 9 will be the last one. That right there could be your 9 a.m. candle to take the trade. Very simple. So if you tell me, hey, I like to trade the London session, talking about 5 a.m., okay. So this could have been that. So let me take it back a little bit, just to do it a bit slower for you. Okay. Look, if you are somebody that trade the New York session per se, right? Let's just say this candle right here was the last bearish candle. This last bearish candle would have closed at 5, okay? At 5 a.m., right? From 5 a.m. to 9 a.m., you would have had this as a bullish engulfing. You would have just taken this to go to the top. Very, very simple. If you're somebody that trade the London session, we're going to run the hypothetical scenario, right? This bearish candle right here, this last bearish candle would have been the 1 a.m., right? And then the bullish candle would have been the 5 a.m. Same thing, right? So this last bearish candle could have been at 9 p.m., right? 9 p.m. because, from 9 to 1, right? From this last bearish candle could have been at 9 a.m., where this bullish candle would have been at 1. The last bearish candle right here could have been at 9 p.m., right? After market opening. Then the 1 a.m. would have been your bullish engulfing. Okay. It's very, very simple. Now you should be catching on. Basically, you can anticipate when you're going to have your price action, at what time your price action is going to be available to you, right? So if the last bearish candle is at 1 a.m., like so, guess what? The next candle might be your bullish engulfing, and that candle will close at 5. If the last bearish candle will close at 5 a.m., that means the next 4-hour candle will close at 9. That could be your bullish engulfing. If this candle right here closes at 9, that means at 1 p.m., right? The last candle would have closed, which is the 4-hour, could have been your bullish engulfing. So either 1, 5, or 9, literally. So when you go back test your pair, right? I guarantee you, when you notice the bullish engulfing, it will be at either one of those times, 1, 5, or 9. I don't know all the times zones, but Eastern time, 1, 5, or 9. Okay, I guarantee you it's gonna be one of those. So again, short, sweet, simple. Market come to the zone. We just simply waiting for a bullish engulfing, and here it is. Drag this up a little bit. I'm just trying to match it with this. Boom, low point. First target TP, let's say up here, already got hit based off the 4-hour structure. And then when we go back to the daily, let's move forward real quick. Bring it down. Okay, look at that. Just like I mentioned before, here, when first one got hit, boom, boom, and then this structure high all the way to the top. Currently where market is at right now. Boom, look at that. See that? So your TP got hit 3 days ago. Okay. So we're talking about here, mid-November to mid-December. So a buy that you get to hold for a very, very long time. And since you are trading the higher time frame, it makes the process a lot easier for you to add on. What I mean by that is when we're looking at structure from the double bottom itself, market did go to give you a new high point, and guess what? It came back to retest it here. So within here would have been your next 4-hour bullish engulfing to go up, right? Structure point, it closed above, right? It closed above it, retest. So again, within here, your next 4-hour to continue up. So we do have this here and then TP. So if you was adding on, this right here would be trade 2, and trade 3. And TP hit like 4 days ago. Very simple. So again, just go to your chart. Very simple. Go to your chart, identify any setups on the daily or the weekly or the month. Any double bottom of any sort, just mark the zones, right? And then drop down to the 4-hour. I guarantee you it is going to be a bullish engulfing. Again, the variation might be very different. So I had all of them marked up, but I don't want to extend the video to be too long, but here it is. So that's price action, single bar price action, bullish engulfing, the ultimate price action, right? 95% winning rate, if you want to call it 75 or 85, but I guarantee you that, right? Very plain, very, very simple. Again, the price action, ultimate price action book is available now on Amazon. Go ahead and show me some love. Go ahead and pick it up. I guarantee you success, okay? I guarantee you success, all right? This is not a lot of reading, straight to the point, all right? Very detailed, not just the price action with the examples of how the price action would look like itself with the setup itself, okay? All right. Very little reading, and the reading that you are doing is very detailed and constructive, all right? Straight to the point to help you understand, all right? Amazon available now, all right? Of course, we do have, if you want to know how to sell the market, I go over, of course, on the videos, you will see that. Mastering the bearish market, basically all 5 different variations of double top for the ultimate buying setup, all 5 different variations of double bottom. Just like when I was going over earlier, you know, a little cheat sheet for you guys. Textbook double bottom, equal bottoms. Second one, where the next one is somewhat semi-lower, okay? And then, of course, we got this one. Oh, no. I didn't mean to do that. Just giving you a little treat real quick. Yep. All right, so we got 1, and then boom. All right. I'm not going to give you all of them. We're going to go ahead and go, since we're going to cover them in the video. So yeah, so that's the first 3. All right. Still missing about 3 more. Help you understand that how a double bottom work and when it's still valid. All right. So I'm going to see you guys in the next video. YouTube, don't forget to like, subscribe, show me some love, please. Comment anything that you want me to go over or to pair. I will personally come here and back test it for you, showing you in detail how you could have entered a trade and how to anticipate the market. Okay.